Good morning, traders. It is Sunday morning, January 7th. This is one of my first videos of the year, so happy new year. I hope your trading year is off to a good start. Market's a little soft. We're going to be talking about that. One of the most important things that I do in all of my videos is to go back and review the previous picks that I've made. Each one of those picks, I described exactly why that stock and why that trading opportunity is attractive to us. And so I start each one of these videos off with a review of that previous pick. What went right? What went wrong? That's the only way that you're going to get a feel for how effective this systematic decision-making approach is that I teach you. I'm not just going to go back and take a look at my previous pick in this particular video. I'm going to go back and take a look at all the picks that we've done over the course of the last 2 months. No cherry picking. This is all of them. And I think that when you get a look at how they've performed, you're going to get a real sense for how effective this systematic trading approach is. We're also going to do some market analysis, and of course, I'm going to find you a new pick that sets up well this week. And we're going to talk about what's coming up for the market and where I believe the market is going to be heading. So what I've created is a watch list on the left-hand side. This will make it very easy for me to chronologically click on the symbol and to take a look at the stock. In the right column here, you're going to notice that I've made a screenshot. This is the actual video date. As with anything that you see on YouTube, you should go back and verify that what these people are telling you is actually true. Please go back and watch my videos, each one of them. And this is easy to do. I watch the first 5 minutes of the video, and that's when I'm reviewing the previous pick. So I've made it super easy for you to do. I want you to do this. Don't stop there. If you find an inflection point on a longer term SPY chart, go back and take a look at those videos on my YouTube channel. Did I get it right? I've been doing this for over a decade, and I've got almost 1,000 videos. Each one of them highlight picks. So please do your due diligence. Until you have that trust in a systematic approach, you really can't pursue it. It's just one-off picks. You really need to buy into what we're doing here. And then once you've really started to appreciate how well it works, then you can roll up your sleeves and really start to dig in and learn more about it. So that's the point of this entire video channel, is to show you a system, teach you a system, use the system to go find new picks, then follow up on how those picks did. So let's get started. This is how I wanted to kick off 2024. Let's take a look at where we've been. In October, the first week, 2 weeks, I started to shift to a bullish bias. And so all of these picks are bullish. We were not entering those trades. The market was still pulling back. We were simply getting our lists together so that when we had that market support and when that market released off of that low, we were looking for a capitulation low, we would not be scrambling to try and find our long picks. We'd already have them lined up. Also, we had a number of day trading shorts that we had traded from August until mid-October or so. But I felt that the hour was late, and I did not want to highlight a bunch of short picks in the first couple of weeks of October, because you had to be super nimble taking profits on those trades, because I felt that this rally was going to snap back fast and it was going to snap back hard. And if you were not a seasoned professional and you were not nimble, you were going to get trapped. So Meta was the first stock that I've got on my list, and that was back on October 11th. And if we go back, we can see October 11th was right in this area right in here. And yes, the stock did pull back a little bit. That's okay. This was going on our longer term list, and we were waiting for that market reversal. We also had earnings coming up. Once we got that reversal, you can see how Meta has performed very, very nicely. In fact, it's one of the better performing mega cap tech stocks that we've seen. On October 18th, ADBE was a stock that I highlighted. October 18th is right in here. So we're waiting for that market low. We get this breakout through horizontal resistance. That is your entry point. Beautiful, beautiful stuff. AMGN, which, by the way, gee, Pete, doesn't look so good right now. The stock is pulling back. We're trading. We are looking for opportunities. If you get a move in a stock from $570 to $630 in the course of 2 or 3 weeks, guess what? You should take those gains. That is a huge percentage move. That's almost a 20% move in the underlying stock. What more are you waiting for? And you can see earnings right there, the A at the very top of the chart. That is earnings after the close. We wouldn't be holding into those earnings anyway. Amgen, really nice. That was on October 22nd. So we'll go back to October 22nd, right in here. You can see a downward sloping trend line bouncing off of these major moving averages. Once the stock started to gain some traction, you can see that in the course of the last week, this stock has performed really well. Amgen's done well. Once the market put in its low, which basically was around November 1st, is when we started to get that rally. Since then, and the market got above the 200-day moving average about 3 or 4 days after that. So this is when the market actually started to shape up very nicely, and you can see how AMGN has continued to move higher. SPOT, we love this compression right in here. I had highlighted it back there. Stock starts to just grind higher. October 25th is right in here. That's a post-earnings breakout. Checks that breakout and starts to grind higher. What do you mean checks that breakout? Well, it broke out through this horizontal resistance level, came back, tested it, made sure that that horizontal resistance is now support, held, and then the stock started to grind higher with the market. Beautiful stuff. GPS, that was on October 30th. October 30th, this has been just a gangbuster, you know, from $13.50 up to $21. Sweet looking stock. Netflix, 11.2, November 2nd. Look at that move from 11.2. Just gorgeous, gorgeous move. VZ. VZ was a longer term play that I had shown you, and I told you that there was going to be a rotation out of some of the bigger tech names and into some of these laggards, some of these very stable stocks. It just hit our price target. We were buying March options, March 35 calls on this particular stock, and this came out on 11.5. So we're right in here. We've got this little breakout right in here. I liked it through this horizontal resistance. We also had some longer term trend line breakouts. Beautiful grind higher. Coin. Coin has been parabolic on November 8th. And so for all of you, the question is, gee, Pete, should I buy it now? You know, if you've waited like a week and you've seen this thing make a 30% run up, you've missed it. You know, a lot of these, you really should be watching for those technical breakouts and that heavy volume. I'm looking for these moves to take place in a short amount of time. In all of these videos, I describe what I'm going to be looking for out of the market, what I'm expecting the market to do, and if the market does what I expected, here is what I'm expecting the stock to do. If the stock does what it's supposed to, I like the long position. But we need to have both components, the market and the stock. Well, the market has been a no-brainer since October, the end of October. The stocks, you've had to look for those pullbacks and those support levels, and when what I've recorded in the video plays out, you take the position. Coin has been fantastic. This is kind of a little warning shot in here. Would I short coin? No, not on this move. Personally, after I see strength like that, it tells me that there is some bona fide buying out there, heavy volume as well. I would view this, first of all, as probably going to be a bullish flag formation. This is a pretty steady pullback. Market also has pulled back, but until I see a lower high double top, I'm going to assume that this is going to be a bullish flag and that the stock is going to continue to rally higher. Am I out there buying coin now? No, I'm going to respect these two long red bars that are stacked. This is a pretty substantial pullback. So no, I'm not out there buying it, but I'm going to be watching. And when I get a quick big pullback of this magnitude, this is a move from $187 down to $144. That's a big flipping move. It tells me this is probably overextended. Didn't want to see anything that deep or that dramatic for sure if I'm long. So now you're waiting for that grind higher, and if you make that lower high double top and then the stock starts to roll over when the market is strong, it shows you that there's some resistance and that this stock is getting tired, that it's made its move. So let me repeat that because it's a very important point. If the stock were starting to rally up and it tried to test this resistance level and it was not able to get through when the market is strong, then that tells me that this stock is tired. Because when the market is strong, I want to see it make a new relative high. This is a big pullback. I'm going to respect it, and I'm going to understand that that means there are sellers in this area. So I'm not buying it, and I'm not shorting it, but what a hell of a ride that was. AAPL, Apple. Apple's been pretty weak. That one we came out on 11/2. So 11/2, the 12th of November. So 12th of November was right in here, and that was probably a Sunday night video. So you could look at this and go, that was a dog, Pete. What a horrible stock. Apple looks horrible. Yeah, it doesn't look real good right now. It's broken some pretty major support levels. But if you look at what it did from that November 12th video, it went from roughly $185 to $196. That's a nice move. That's what we're trying to capture. TSM, that was a video on November 15th. And let's see, November 15th was right about in here. So, this stock, call a spade a spade. I'm not overly impressed with this. We had a nice little compression breakout in here that you could have taken advantage of, but we had other stocks that performed better in this period. So I'm going to say TSM was not the best pick. JPM. Okay, we highlighted that along with BAC, along with Citigroup. You've heard me repeat that name because it keeps coming up on our lists. Earnings next week. We've got JPM kicking off earnings season this Friday. So yes, we're jumping right into the new year and earnings season is going to start off. So JPM, that came out on November 19th. I told you I liked the laggards. I like the banking stocks. I still like them. I'd be careful with them into earnings. Let those earnings announcements come out. Obviously, good news is priced in. But JPM has gone from $152 to $172. We're buying longer term, deep in the money calls with lots of time. Very low option implied volatilities on these. So these are the types of stocks that have a tendency to grind higher. That's exactly what this stock has done. It's been a great play. Abbott. Abbott 1122. So 1122 is right in here, November. I told you at the time, I can remember it. But Pete, that 100-day moving average is in the way. I had seen enough relative strength and enough volume to tell me that this stock was going to break out to the upside. It's been a laggard, like I'd mentioned to you, to this point in here. It's a type of stock that asset managers are going to want to add to their portfolio for year-end window dressing. Stock has been able to rally up from $102 to $111. Another grinder with very low option implied volatility. So we could go deep in the money, buy these calls almost at parity in many instances. Disney. Disney on 1126. So let's bring up that chart. 1126. This was a dog. Okay, Disney was not a good stock. But if you go back to that 1126 video, specifically, I had mentioned to you what I want to see is I want to see the stock 3 EMA cross below the 8 EMA because I don't trust this stock. It's been choppy all over the place. It's getting through this horizontal resistance. It's been able to get through all the major moving averages. That's all great, but this stock is so dang choppy. And so when that 3 EMA moves below the 8 EMA, I want to see this gap preserved. And we were using that EMA 3.8 on a M30 basis, a 30-minute basis. Well, it didn't take long because I think the video came out, yes, the 26th. So right in here, video came out. The first time we got the 3 crossing below the 8, we already had this long red candle into the gap. No bueno, no trade. We did not want to see that. We had a strong market. We wanted to see a tiny little retracement, let that 3 go below the 8, and then get 3 above the 8, still hugging the high, and then whoosh off to the races with a strong market tailwind. That was the premise of the trade. It's very important that you don't just come in and go, Pete likes Disney, I'm going to buy some right here. I always have caveats attached to every trade because when I'm evaluating the market and I'm evaluating the stock, there are certain things I'm expecting from the market. We got it. Market did exactly what we wanted. There's certain things that we expect from the stock. The stock did not perform. So you move on. And you keep setting alerts. It's something very important to do also is set those alerts. When you see a stock that's setting up and it looks interesting, set up that 3.8 alert. You get that M30 3.8 alert and you see this long red bar and you're into the gap. You go, nope, not going to trade it. No harm, no foul. Took me 2 seconds to set that. Now I can evaluate the dip. I'm evaluating it. No, no interest. So Disney. Yeah, Disney was not a particularly great pick, and it looks fairly weak to me. During a market that has been in go-go rally mode, it has been pulling back. That is longer-term bearish. 1129, or excuse me, 1129. So let's go in here. We got this nice breakout here on AFRM through this horizontal resistance. There is the 1129 bar. Its stock went from basically $33 up to almost, went up to $52. Just gorgeous, gorgeous stuff. Let's see, we've got AMR is next on the list. That came out in the video on 12/3. So right in here. You know what? I keep doing this. AMR is not American Airlines. It used to be American Airlines. AAL is actually the stock that I highlighted. It has not performed as well as AMR. I wish it had, but AAL was actually the symbol that I had highlighted. So 12/3, which is right in here, you can see that yes, it did move higher. And in that video, please go back and check. My target profit on this was somewhere around the $15 level. It almost made it there. It was 35 cents away, but really nice profits to be had in that trade. So if you start seeing the stock lose its momentum, and if it ducks below that 100-day moving average, this is a sign in here. You know what? I should take gains on this. And we went all the way out to a March expiration. This is the normal monthly expiration. These are the $10 calls. We were buying them for $3.40 in that video. And I went back and I checked all this stuff because I'm interested. I want to make sure that I'm providing you with good information, information that you can go back and validate. Those options are currently trading at about $3.80. So they're still up about 10% versus where the video came out. But you get the move that we're looking for. You're starting to hit the targets. You're very close within that range. And now you start kind of waffling around. What did the market do during this time period when the stock moved back below the 100-day moving average? Well, in the last 3 days, last 4 days, the market's been selling off. But until then, it was marching higher. Pete, how do I know when to take profits on a trade? When the market is strong and the stock is losing its relative strength and it's pulling back below major horizontal support, technical support, that's when you should start taking profits. We'll put up the overlay of the SPY, and there you can see what's the market doing. Look, the stock is starting to lose its momentum in here. It's testing that 100-day moving average. We'd like to see it hold that support. Oh, it dipped below it right there. That's not particularly good. Now we're back below it again. Yeah, you would start taking profits here because the gray line is the SPY, because the market has been moving higher and the stock is starting to lose some of its momentum. AMR was still a nice pick. It's still a good pick. I mean, the options are still up 10%, even with the market pullback. I might as well take a look at it because this is going to spawn some questions. Would you buy it here? No, I don't think I would. And let's take a look at it. You've got this bounce off of the 100-day moving average. I don't like this relative weakness that's set in before the market even rolled over. So I'm a little bit leery of this. If I see the stock come back up to the 100-day moving average and spend time above it and then start to regain its relative strength and move through this little resistance level in here, yes, back up here near the highs, gaining relative strength, then I would be interested in it. So for now, I would hold off on it. AMD, that came out on 12/8. So 12/7, 12/8. So yes, the stock went from about $127 up to $150. I would say that was an excellent call on AMD. AVGO, 12/10. Right in here. Actually, now I know why there's not a 12/10 bar, because that would have been a Sunday video. So that video comes out Sunday, and the next day, Monday morning, you had every opportunity to get long from the open. What does that stock do? It goes from 956 up to 1151. We don't need to say much more about that. That was just an incredible run. We really nailed that one. MDT, that was on 12/13. So I liked this long bar right in here through that 100-day moving average. Yes, it dipped below, so it's trying to check some of these gains in here. Not a particularly fast moving stock. So you get this dip below the 100-day and then almost a bullish engulfing candle to completely erase that with a close back above the 100-day moving average. We're back on track, and now the stock is actually making a new relative high when the market is pulled back. I love this. Look at how the stock has been grinding higher this week when the market has done what? Sold off. Yeah, MDT is going to continue to go higher. Could this be my pick of the day? Yep, for sure it could. I love this price action in here. So, yeah, why not? PATH was a stock that I highlighted on 12/17. So 12/17 is up in here. So $25.50 down to $22.61. This is not a good pick. This has not played out well. This was a longer term pick. I did like this gap up. It is testing the gap right now during this market pullback. It's a volatile biotech company. So I would be very careful with it. I don't know if it's biotech, it's actually a tech company. But in any event, it is fairly choppy. This is a nice breakout. This tells me that there were buyers in here. It's pulling back a little bit with the market. I want to see this horizontal support level hold. I would stay in the position. I'd be evaluating what happens to the stock when the market finds its footing and it starts to move higher, because then I want to see some real strength in this stock. As the market starts to challenge its high, I want the stock making a new high. This really was a stock play because the options are fairly illiquid. So your game plan right now, if your long path, is you continue to hold it. You use that low right there on a closing basis, which is $22.13. If it closes below $22.13, then you would exit the trade. I still like it though. And then it would fill this gap in right in here. So you don't need to weather that pain and risk that the stock might pull all the way back. You take your lumps right in here, and then you wait for a re-entry at a later date when the stock regains its relative strength. So out of all my picks, because I really didn't have any contingencies attached to path, I just liked the fact that it was grinding higher, and I expected it to continue to grind higher in a strong market. It hasn't done that. So yes, that's how I would be managing that trade right now. SNOW. That was a stock that I highlighted on 12/27. 12/27 is right in here. Okay, so yes, this stock has pulled back with the market. One of the reasons that I liked the stock was because it has high option implied volatility. I had explained to you that heading into year end, the market was starting to get up to a pretty frothy level, and I was looking to take advantage of time premium decay. I liked the fact that this stock had been drifting higher with the market. It was still retaining its relative strength. It had gotten through this horizontal resistance level, but I wanted to distance myself from the action. And so what a stock like this avails me is an opportunity to sell an out of the money bullish put spread, which is what I suggested doing. We sold the January 19th expiration date. We sold the 185 puts, and we bought the 182.50 puts, and we did that for a 50-cent credit. And right here during the live event, I updated the position, and I had mentioned, no, I would not be shutting this trade down because the drop has been market related. The stock's a little bit frothy, but I'm expecting the market to bounce, and I'm expecting the stock to bounce. We're going to talk about the market in just a minute. Yes, I believe that this horizontal support level is going to hold, and that's what I've been leaning on from the time that I put the position on. Friday, the market closed weak. What did the stock do? Stock put in a very nice day. So that spread, the 185, 182.50, I checked it. I believe it's like 70-cent bid offered at 90 cents. So it's still a losing position. But with every passing day, every passing hour that stock stays above that 185 strike price, that spread becomes cheaper and cheaper. And I do believe that the market is going to catch a bid. Maybe not this week. Maybe we still have a little bit of froth to work off. But by the time we get into the meat of earnings season, I am expecting the market to regain its bid and to move higher, especially as we start getting into mega cap tech earnings. This is a tech stock, so yes, I'll be leaning on that support. I expect it to hold. I'm not doing anything with that bullish put spread. I'm just letting it sit. This is a normal market dip. And as soon as the market stabilizes, this stock will also stabilize, and then time premium decay will kick in. So I still like it. CVX, I highlighted in our last live event, which, by the way, some of these picks were from the live events as well. A little bit more difficult for me to go through and sift those out because I don't start immediately with a review of my previous pick. I don't get into the new picks. So I had to go back and really watch for this. But at the end of the video, my pick of the video was CVX. I like this little horizontal resistance level. I like this compression breakout. Had a little bit of overhead resistance, so what I needed to see was a close above this compression right in here. Didn't get it. In fact, the stock has been pulling back a little bit. So energy stocks, they're commodity stocks. They move with the price of oil. So I would still be watching this horizontal resistance level. I'm not as interested in it now as I was a couple of days ago. I thought energy might catch a bid. Was really looking for this gap in here to fill, but it's kind of coinciding with this 100-day moving average, and you can see how this high from the day of the video, the stock backed off very substantially, and this resistance seems to be pretty firm. Actually, the video was here, and the stock closed pretty well off of its high. Then the next day it gapped up and retraced the entire day. So you're not going to make any swing decisions when you get an intraday candle like that closing on its low. So no, this resistance level is still intact. Can't say that I'm overly excited about CVX right here, right now. It's got to prove to me that now it can power through this high and challenge that 100-day moving average, just not seeing the strength in it. So those are all my picks from the beginning of October through last week. You can see how well they've done. Yes, in this list, I had a couple of kind of doggy stocks in there that looked like they were going to get going, never quite did. Disney was one. PATH, we're kind of hanging on to right now. SNOW, we've got that bullish put spread on that is tenuous. But if you look through the entire list, and we've gone through it, Amgen, Spot, GPS, crazy good. Netflix, crazy good. Verizon, Coin, Apple, even though it's settled back now, did very well. JPM, just off the charts. Abbott, Affirm. I mean, just go down the list. It's been unbelievable. So it should be. When you get a market that does this, and when you're long, your stocks should be moving higher. So let's get into some market analysis. I felt that that was really important. There's a lot of BS out on the internet as far as people who claim that they've got a good system that they're trying to teach you. The difference is they charge you thousands of dollars for it. I don't charge you anything. I do these lessons every week. I do 2 videos, and all I do is to keep rehashing these same important concepts and showing you really good stocks. So we're going to go in. I'm sorry, I'm going to remove this window right here, and let's go in and do some market analysis. Let's get our bearings. Let's see what the market has in store for us. So you can see this powerful move right here. This is what I've been referencing for the last 2 months. This is still what I'm leaning on. All of these buyers in here are not just going to throw the towel in and go, that's it, I'm done here. Everything has changed. The market looks horrible. We're going into a recession. This is what you're going to hear in the headlines right now. When you get the year starting off with 4 bearish days, that's when you start hearing about all the negatives, whether it's, the war in the Middle East and oh my God, we're going to have new supply disruptions and that's going to be inflationary and we're going to start to see a recession coming in now because the yield curve has been inverted for so long. This is what you're hearing. You're going to be influenced by it if you start listening to these major news outlets. They have to describe every wiggle and jiggle. They have to explain it. They want you so dependent on that TV station that you don't think there's any chance that you could possibly trade successfully without watching that news. Please do yourself a favor. Ignore it. Turn it off. Watch price, because price is what's actually happening. This is actually what institutions are doing. And right now, this is just a normal pullback in a bullish market. This is nothing more than that. In fact, anywhere along the line in here, I was looking for one of those pullbacks, one of those dips, so that we could sell some bullish put spreads. Well, we didn't know how legitimate this early rally was off of the low. I suspected we were going to get a big year-end rally. So in here, we were selling out of the money bullish put spreads. When we got this gap higher, I was looking to sell out of the money bullish put spreads, but there weren't really that many great candidates, and it was apparent to me that the market was going to keep drifting higher because asset managers did not buy in here or in here or in here. Those are gaps up. There's no volume on an actual gap up. Once the market starts trading, okay, fine. Well, asset managers tend to be dip buyers. That's when we wanted to sell our out of the money bullish put spreads. Never got the dip. Wanted one. I really wanted one because I wanted to load up on some of those positions and give ourselves a little breathing room and take advantage of time premium decay. Didn't get it. So what did we do? We started looking to where asset managers were looking. They were looking to buy some laggards that they thought would perform well. Those laggards had low option implied volatilities. They were grinders, if you will. We saw money rotating out of tech and into some of these laggards. I've referenced this in my videos. Those are the stocks that we wanted to buy longer term in the money calls on with a very high delta of 0.7 or higher to take advantage of this drift higher. Option implied volatilities cratered. They got crushed. This was a time to be an option buyer. So a lot of those stocks that you saw me highlight, that's exactly what we were recommending doing in the video. So what do we do now? Well, this is AVWAP-Q, and you can see how the market has been able to pull back below it. I wanted to see that level retained. I also wanted to see the open of this long red candle preserved. I definitely want to see the open of this green candle preserved, and that opening price is around 464.50. So that is a support level that I'm leaning on. There were buyers there before. We want to know that they are still there. So we get this pullback, price starting to compress in here. I believe that during the course of this week, we're still going to see a little market weakness, bid check, bid check, bid check. The more this looks like the market is going to roll over, the more bearish speculators we'll see. And we want bearish speculators. And so what we might see this week, and what I'd like to see, because it would actually get me fairly bullish, is I'd love to see a big down day that looks terrible. We might even check that 464.50 level. Awful price action. And then the market rallies and it closes on its high and it forms a nice long bullish candle. Kind of like that one, right in there. Get this nasty day of selling, and then the next day it looks like, oh, we're going lower. Look at this. We took out that prior day's low. We're rolling over. But the buyers come in and they drive the price up. When we see that, That's what we see afterwards. And that is what I'm looking for here. Get those bearish speculators in there, frothing at the mouth, just wanting to short the heck out of this. There's no way this market could possibly run that high. I'm going to short the heck out of this thing, and look, it's starting to roll over. That's exactly the kind of mentality that I want to play off of, because as soon as they load up, the door is going to get slammed on in their face. They're going to have to cover their short positions. Bullish speculators who were long in here and who got flushed out on this move, they are going to see a nice big move higher, and then they're going to reload their positions. That is going to be buying pressure as well. So you got the shorts covering. The shorts might even pivot to a long position, and you would have bullish speculators getting back in. That's what gives you that long green candle higher. That's what gives you that bullish flag formation that I've been telling you to watch for. I think that move higher throughout earnings season, probably into early February, has the potential to make a new all-time market high. That's what I've been telling you I'm watching for. There is nothing, absolutely nothing in the price action that I have seen this week that tells me any differently. And the macro backdrop has not changed. So we got an unemployment report on Friday. Oh, this is horrible news. There are 216,000 new jobs were created in December. It's much better than was expected. So yes, you've got the crowd who's thinking, oh, well, now the Fed's not going to be able to cut rates in Q1, so that's actually bearish. There was a bearish component to it, and that was the wage component. Wages were up 0.4%. We wanted to see those at 0.3%. 0.2% would have been even better. That is the largest input cut cost for manufacturers and for companies. It is inflationary when they have to pay people more. There is a flip side to that. More people have jobs, and they're making more money. And consumption has been really healthy. Those are all good things for corporate profits, especially good for bank earnings. And now you kind of throw into the mix that, hey, inflation could be a little bit hotter than we wanted. It could keep the Fed from cutting anytime soon. So people have jobs, they're making more money. Bad loan write-offs are very, very low. Credit risk is very, very low. Interest rates could stay higher for longer. Those are all really good things for banks. Banks have run up an awful lot recently. They don't tend to make monster moves like that. It's always a good backdrop for the market when financial stocks are doing well. I don't know that they've got a lot more firepower left in them to the upside, so I think they're probably going to compress and consolidate some of the gains. I've shown you JPM, which is crazy move higher on that stock, and put that up and you can see JPM has just been lifting off during this market pullback right in here the last week. What did financials do? We highlighted this in the live event. Both Harry and I love JPM, we love BAC, we love Citigroup, all look good. Earnings coming up now. So if you're going to day trade them, and if this move is continuing, then you want to make sure that you're day trading them, because you need to be out of those stocks before earnings. It also means that you're a little bit vulnerable in here, especially for swing trades, perhaps even for day trades. You get in, you get cute with it, and then the stock decides it's going to pull back into the number. Now you're kind of left bag holding. So I think you're getting into the final hour of these stocks moving higher. So I'd be really careful with them into earnings. But look at this move higher. So again, I look at banks, I look at financial institutions as the oil that lubricates the market engine. And when they're doing well, the market has a tendency to do well. And I'll tell you the flip side of that is when financial stocks are not doing well and there are credit issues looming, that is the one really big spoiler for the market. You get into a credit crisis situation, that's when you can get extended market declines. And that was one of the worries that we had over the course of the last 2 years, was that this fastest rate hike that we've seen in decades was going to create all sorts of credit issues and credit concerns. And so that credit worry is what weighed on the market over the course of 2022. In 2023, we had a couple of signs, a couple of banks went under, but that was very quickly smoothed over. There was no contagion. We haven't seen anything else related to the banking industry that tells us that there are lots of other weak hands. So the market's continuing to move higher, and that's what financials are doing. Another reason for this to result in a bullish flag formation. So let's continue to do some market analysis. On Friday, I did want to mention the 5-minute chart on the S&P 500. So you've got the market opening a little bit higher in here. We had ISM services, which came out Friday, a little softer than expected. And you've got this little move higher and then this big blow off green candle on a 5-minute basis. Members know that when I see one candle, I don't like these. These are very oftentimes reversed. So what I would prefer to see from a bullish standpoint is divide this candle into 5. I'd like to see a green candle, 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 not one giant candle. Why? Because 5 consecutive green candles of decent size tell me that there is persistent buying. Those institutions are in there lifting offers persistently. When you get one of these, well, this is the ISM services number. It came in a little bit weaker than expected. So consistent with, hey, we want to see a strong economy right now. The only reason you get this kind of liftoff is that, but for some reason, everybody would weight ISM services as more important than the jobs report, and that, hey, we are getting a little bit of signs of recession in here, and ISM services is weak, and that's going to put the Fed easing back on the table. And that's a bunch of nonsense from my perspective. So I didn't like the fact that we had one long green bar. I didn't like the fact that it came on that number. And so the tell now is that the market can't advance. It wasn't even able to get through the prior day's high, wasn't able to test it. We had a bullish 1OP. 1OP had started to rally in here. We weren't getting that test of that high. So not a good backdrop for us. 1OP rolls over right in here. That tells us that now we're starting to see resistance. We're starting to see some wicks. We need to be careful. We get this big decline. Now we know this is going to be just a choppy day. You know, this selling tests a low, and now we're just kind of waffling around. I believe it was the wage component was the real issue on why the market didn't rally on Friday. I feel that if hourly wages would have come in at 0.2%, we would have been able to rally, probably would have been able to get through that prior high from Thursday, and we would have had a much better looking D1 chart. But buyers just couldn't get behind the wages number. So this week, what do we have coming up? In terms of news releases, we've got CPI on Thursday. Okay, well, inflation has been easing a bit. Yes, there are a few concerns as far as, you know, what the Red Sea issues might be as far as shipping and everything and how that might possibly disrupt things. But I feel that everyone is expecting a good CPI number. So I'm almost in the camp of, gee, if it's going to surprise, it probably is going to surprise on the hot side. It's probably going to generate more of a negative reaction. Is it going to be grossly negative? No, I don't think that either. So I don't see that as a catalyst for that bullish flag formation. I think this week we start to form a little bit of a bid, not move much higher, get through that CPI number because of kind of how I think it might be interpreted and how it might play out. And we get earnings on Friday from JP Morgan, other large banks. That news should be decent. And we get the PPI. PPI should be actually pretty decent also. Energy prices seem to be stabilizing and coming down a little bit. So this week there's not a lot, and it's all back end loaded toward the end of the week. So you've had a nice little pullback from the high. Buyers are going to be looking for some aggressive support, meaning that bullish hammer that I spoke of. Market looks horrible, 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 horrible in the first hour of trading, and then bye bye bye, bye bye bye, bye bye bye, bye bye bye, and you get that bullish hammer. When you see that bullish hammer coming in, and hopefully we haven't drifted too much lower, really want that 464.50 level preserved. So get that bullish hammer anywhere in here. That's going to be a good sign for buyers. And then a green candle after that will set that low. And then into earnings, especially mega cap tech earnings, I think the market finds its footing, continues to move higher, and takes out this relative high in here. That's how I'm playing it. That's how I see the market unfolding. Let's go find a stock. Been a very long video. I apologize for that, but I hope that the review of all the previous picks gives you the confidence that you need to really learn and embrace this system. Hope you've been able to take advantage of some of these picks, and I hope that my market analysis gives you the confidence to be looking from the long side. Don't be fooled into shorting this market. If you're a novice trader, don't even think about shorting. Just focus on the long side and how you are going to be trading it when you find that support, similar to what we were doing in here early in October. So this is the final leg lower, but already in here, we are looking for long positions so that we're ready for this move. And that's the same thing we'll be doing now. I had also mentioned to you earlier in the video that in here we were selling bullish put spreads. In here we had to shift to buying in the money calls on the laggard stocks because we didn't get the dip. Well, right now, got a little dip. So I'm going to be looking to sell a bullish put spread on a stock that I really like. I'm expecting that somewhere in here we're going to see a little bit of market weakness. But if I distance myself from the action and I find a stock that's really strong, that's not announcing earnings, then I'll be able to sell an out of the money bullish put spread, let the market do what it's going to do. Eventually, it's going to run up and make a new high. And when it does that, this stock is going to participate, and that out of the money bullish put spread is going to expire worthless. So I'm going to go into heavy buying. It's one of our lists. And I'm going to remove the SPY overlay. You know what? I'll keep it up for a second because it's going to prove a point to you. And the point is, I was watching NVIDIA on Thursday, and I saw some really nice looking strength on NVIDIA right in here Thursday. The market sold off pretty hard. So we're going to go into a 5-minute chart. And on Friday, right out of the gate, I had let members know I really like what I see in NVIDIA. And here's what I saw Thursday that got me kind of excited about it. We had this nice market rally early. Okay, NVIDIA participates, and it participates in a very nice way. Now we get this market decline, and you can see how the entire day on Thursday, the market sold off and it finished near its low of the day. What did NVIDIA do? It drifted lower, but it still finished the day higher than the open, so it did not give back all of the gains. When I saw the stock gap higher on Friday and retain its gains in here, I knew that this stock was ready to move higher. And that's exactly what it did. And you can see how it moved up very, very nicely. Here's the other tell. This is why relative strength works. This is the whole premise of the system. So I'll give you an example of a trader who comes in and goes, "Hey, okay, I'm interested in Nvidia. Pete highlighted it, and I'd like to trade the S&P E-mini instead, though, and I'd like to buy the E-mini because he's been saying the market's going to go up, and the market early on Friday looked like it might go higher. So after that ISM reaction and everything looks good, and you get up in here, you buy the futures. Well, if you weren't monitoring the position and managing your gains and watching for that resistance that was forming that I pointed out earlier, all those wicks and the fact that this long green candle was a one-off and the market wasn't able to add to it, and you got the 1OP cross here. If you're not paying attention, you're going to have a really big loss as the S&P 500 drops. But if you were long Nvidia, so that's where you've got the spike in the market. If you had bought Nvidia right here when you were thinking about buying the futures, that's right at about the 488 level. Where did the stock finish? Around 492. You were absolutely wrong on the market, but you didn't lose your ass because you were in the right stock. This is the cushion. This is the edge that I've been trading for decades. There aren't many edges like this in the market. So please learn this system, learn why it works so well. I like Nvidia, okay? Do I think Nvidia is going to the moon? Maybe, but right now the market's not looking so hot. So what I want to do is I want to take advantage of what I'm starting to see in Nvidia, and I want to distance myself from the action. It is a choppy stock with high option implied volatilities, similar to snow. So let's take off that SPY overlay, and let's take a look at these major moving averages. This is a 100-day moving average. I've also got the 50-day moving average in here. I probably even have AVWAP working in my favor. So we're going to look at AVWAP-E. We can see where that comes into play. 1, horizontal support, 2, 3, 4 levels of support. I'm going to go down to the 450 strike price. I know this stock likes to chop around. I know that the market is a little vulnerable. Maybe we get a little soft reaction to the CPI or the PPI. Maybe we don't get a lot of upside follow through to the banks. It's going to take maybe an extra week for the market to regain that support and to regain its footing before it shoots higher. It's okay. Let's sell an out of the money bullish put spread on a stock that we really like. We're $40 out of the money. Let's see if we can get anything for the 450, 445 bullish put spread expiring before earnings. Very important point. When we are selling options, we need those options to expire before the earnings announcement. Well, we've got a lot of companies that are announcing earnings in the next 2-3 weeks. So we have to be super, super vigilant about that. Hover over the E, earnings release on 2/28/24, February 24th. February 28th. So we need an option expiration before February 28th. So let's take a look. Well, there we've got February 23rd. Maybe we can even go normal expiration date, February 16th. That would mean that we've got to wait about 5 weeks for this spread to expire. So we're going to scroll down, and again, we're looking for the 450, 445 bullish put spread. 450 puts, we're selling those. 445s, we're buying those. That spread is currently 60 cents bid, offered at $1.15. I want to do this spread for a $1 credit. So that's, put your size in, whatever your size is, 10 contracts or so. Put your credit in. And there you go. That's the trade I would be doing. But Pete, how am I going to get filled on that? It's only 60 cents bid. If I were realistically trading this and trying to get the trade off right now, I probably could get filled at 70, 75 cents, maybe. It's a very wide bid ask spread. But I've got over 4 weeks left until expiration. I'm expecting a little bit of softness in here in the market, still getting through that bid check process. The stock is fairly choppy, so it moves up and down. That tells me that I'm probably going to have a chance to get that $1 credit done, and I don't have to rush into the trade because this is a 4 to 5 week long play. If it plays out the way I expect and this $450 support level is preserved, this is going to generate a 25% return on the margin that I'm putting up. And I have a very high probability of making that money because I have multiple support levels between the short strike and the current stock price. I also am seeing nice relative strength in the stock. That increases my odds even further. I am market bullish longer term. Short term, I feel that we still could have a little bit of a bid check. That's how we construct our trades. Market first, long-term market, I like it. Short-term market, going to still have a little bit of volatility, a little bit of movement. That means I'm going to be leaning towards stocks that are very, very strong and selling it out of the money bullish put spread so that when the market regains its footing, then I'll be able to let that spread expire worthless. And if I get that big, powerful move higher in the market, that bullish flag that I'm looking for, now in here, I will be looking to buy some calls. I'll get more aggressive with my trading, looking for that breakout to a new relative high. But I need to see long stacked green candles in here before I shift to that strategy. As we continue to kind of form this base, before then, I'll continue to look at some really attractive bullish put spreads that I can sell out of the money. Thanks so much for watching, everybody. I know this has been a long video, but it's been packed with lots of great information. So I hope all of this really starts to gel with you. I will be doing a live event. And so on the YouTube channel, if you want to watch any of our previous live events, there's a tab that's called Live. Please click that, go in and watch those old live events. Also, you'll see that I'm going to be having a new live event this Wednesday, about 2.5 hours after the open. I do these with Harry. We field all sorts of questions, so make sure and attend. And then during the event itself, you can ask questions. We're going to be answering questions during these live events. We plan to do one every Wednesday. So I hope you can make it. And if you can't, please make sure that you go in and watch the recording of those live events. Trade well, everyone. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.